And welcome to today's edition of the London Session Open. Today is June 27th, 2019, and it's 9:30 a.m. in London when we're doing this live market update. Um, let's take a look at the markets as we usually do. Just need to make sure we're live. We have been having some issues lately. And yes, looks like we're live. So guys, thanks so much for joining me today. Good. So we're going to take a look at the markets as we usually do. And we have Mr. Hyder already in the chat box. Good morning to you, sir. I hope you're having a beautiful day. Anybody else that is watching, don't forget to say hello if you can. And if you're on YouTube as well, don't forget to hit that like button. Very easy. Just press on that like button, and that's gonna help the video start to rank, and we get more people watching this, which is really important. Okay, let's begin. We have John Mitchell here as well. Good morning to you, sir. Thanks so much for joining me this morning. Let's take a look at the markets, right? So euro, dollar actually, it's kind of interesting is the dollar overall overnight was having quite a good day, especially against the dollar yen, but that has sort of slowed down a bit. Let's actually begin with a little overview here. I don't know if you can see, but the dollar yen is pretty much at 108. So what's up with right now with 24 pip? What's up quite a bit earlier today. So sort of the main theme really right now is that we have the G20 meeting coming up, as you know, that comes up in this weekend, and there should be talks between US and China after that meeting. So maybe on a Sunday or so, might be getting some comments. And Treasury Secretary Mnuchin. He said as well that the deal with the US and China is at 90% ready, so they're just missing that final piece, and then they have that trade deal. And that obviously, depending on how that trade deal looks like, could have a big impact on stock markets, which could turn really bullish, and it should also potentially have impact something like the dollar yen, right? And that's why the dollar yen is upward higher. Stock markets as well. The German DAX is up with 0.66%. There's some action there as well, and a bit of action in U.S. stock markets. But I wouldn't get too excited. I'm going to show you some stuff here in S&P 500. It doesn't look that very encouraging. And they have gold prices, which has pulled back. They were up quite a bit. And today as well, we're going to look a bit at Bitcoin, which had like a very crazy rally lately. Now, let's begin though with the euro. So the general idea of the last few days is that we were within this wedge, and the price is now breached above the wedge. And when you usually break a wedge like that, you usually have further gains, and we could potentially reach something like 1568. Biggest challenge here though is that obviously the Fed is looking to cut rates now, but maybe in a few months the ECB is gonna start to do the same, because if the US central bank was not worried about the economy, they would not be cutting interest rates, right? They have to cut interest rates to balance things out. So most likely what you're seeing in the economic data now is probably going to worsen in the short term. And obviously they're trying to soothe and engineer stabilization in the US economy. So the idea in general has been we could probably go upwards, and then maybe maybe later in the year ECB starts to turn bearish, right? Now the idea here has been to buy pretty much at 34.45, and the idea here is for this to go upwards like that. So we really want to. I think down here, I think people will probably look to buy if possible. So we touch this level here, and I think again sort of people are going to be buying here. Sorry, got a bit interrupted there. Yeah, so here I think people will like to buy, and we touched that zone. We missed that with about a pip each time, more or less, half a pip. If we revisit this, I think they're gonna look to buy here again. I'm just gonna remain bullish for now, and we'll do something like that. March 18th high makes sense. Now GBP versus the USD, I think that one is gonna be difficult. As you know, the market did try to trade upwards here, but didn't really manage to sort of do much more than just trigger stop loss orders. You have some support at 26.44, and I'll bet you there's some stop loss orders there some as well, because this is sort of the last low, it could easily trigger that and then just go up again and not really do too much. What is interesting though is that the price could be starting to create what looks like a head and shoulders. So this will be your left shoulder, and this will be your head, and maybe something like this up here could potentially be the right shoulder. Now I'm not saying that we will, this is going to be how it actually looks like, because it could be lower and then upwards, and then you know the break here potentially lifting things upwards. What could cause this to lift upwards? Well, maybe if we have Jeremy Hunt become the next Tory leader and potential Prime Minister of the UK, or will be really the next Prime Minister of the UK. So that's something that could potentially be interesting and potentially cause this to go upwards. However, though, I wouldn't get too carried away here, enthusiastic. It's not doing too much in the short term, and if you look at the daily chart, it's not doing too much here either. Will it go towards the midpoint? I think so, but it can easily take a few months, weeks. It's the minimum for the price to go upwards. Dollar versus the Japanese yen, right? So everybody's sort of getting very, very excited. I don't really understand why. And we're having quite a bit of a push here at 2 a.m. and then you got 4 a.m. Markets going upwards. My general idea has been actually to sell here. Talked about this already on the June 21st. That was looking good. Now went all the way upwards. And obviously, if you reduce the stop loss, there's not too much to do about this. Myself, I'm actually short. Now, I didn't change my stop loss myself. I still have it at 34 here. 34, 35 just here. But the way this is looking, there's a generous that I just might be stopped out in the next few hours or days. But the thing is that markets many times are going to come really, really close and they're going to try to get you stopped out. And but it doesn't have to be like that. So the idea is just to sort of stick here and stay firm with this one. From a daily chart perspective, you know, I think things look, again, they look bearish. There's no reason, at least on the daily, to change our plans or do anything right now. And obviously in hindsight, you know, if I wasn't already short, I maybe would have said, oh yeah, let's short up here. Let's put a stop loss here. The thing is that when you have a trending market, you don't usually get like 100% correction of a move like this. You just get partial correction. And that's why, you know, everybody talks and raves about the fib. So usually, you know, short at the first fib, 50 fib, or the third fib of the move, and then that should be sufficient. But obviously here it's not like that because the market is a bit choppy. So what can I say about this then? Well, I think obviously if there's some deal and that's announced, which I think is unlikely, but if it is announced, then that could potentially cause this market to sort of take out the high, and then, you know, we can give up being bearish here for a while. But for now we are below that level, so I will remain bearish. Now again, if one is very, very bearish, you think there's not going to be any trade deal or nothing like that, the wars are going to continue, then, you know, selling up here could be something. Stop will go about 10879. And the alternative would be you're not very confident and you want to wait, or maybe wait for some bad data, and that's going to kill the mood in the stock markets in particular, and then you wait for a break to 107.55. So those are the two options. Either you're really bearish, just work with this level as a stop key level. Alternatively, you're not very bearish and you just want to wait, and at that point you wait for this level here. Then there's the third option, which is the one I'm in, which is sort of, I'm already short, you know, my stop loss is where it is. Doesn't make any sense to really make any changes right now, and you sort of stick with the position until proven otherwise. Now, there are some reasons to assume that this actually could turn lower, and one of them is actually because of stock markets. Now, stock markets are creating what looks to be a bit of a small mini head and shoulders. Now, the idea a few days ago was to buy here. But this was before you had some of the bad data coming out from the US lately. And as I've been talking about this for quite some time, you know, bad data should probably cause the market to go lower. Unless, of course, we have some sort of a trade deal. Now, on July 1st, which is next week, we have the ISM. Then about 8 days from now, we have the non-farm payrolls. Of course, if the note from payrolls is really good, you know, people be excited about that. And if we have a trade deal, yeah, people gonna be excited about that. So what would I do then? Well, I would probably wait for a break to the upside. That would be something. Um, and sort of, if we take out the high, at that point, turn really bullish. And if one did buy here, you know, there's nothing wrong getting out here. I mean, we're pretty much at the entry level, so that could be something. So there's actually several options. I'm sorry for giving you all the options. The first thing, you're just bullish. You think the market's gonna go upwards, okay? Then you just stick with this idea because the market never traded below the stop level anyway, so you're fine. But if you're a bit uncertain, then getting out here would probably be a good idea. And at the same time, if you're bearish, what would you look for? You would look for the break to the downside here. Again, I wouldn't really treat this really as a head and shoulders, but clearly this is a major level, right? You can see that on the daily chart. And if we trade below this level, it would probably confirm that this is now a new lower or a new high, really. So you'll have a triple top here, really. And then we'll go a little bit lower, and then we'll go down. And that's really what I'm pinning my hope on in case of dollar yen. I'm hoping that maybe later today, U.S. investors is going to sell themselves, and that's going to push things down, and that should just cause the dollar yen to go lower. So again, you have three options: just being bullish where we are, and just manage that. Alternatively, that and that. If I was to choose, I would only work with this scenario or this scenario. Gold, let's talk about that. So gold is under a bit of pressure in the short term, just because, you know, that revelation that we're not going to have necessarily a big massive cut. The market, I think personally, just get too excited as it usually does. The market will get too excited on the bearish side and on the bullish side, okay? And looking at this today, you know, the idea was just to be bullish around here. That's actually something we talked about in an update I did on Investing Cube. If you want to keep track of what I'm up to, you will find my articles, and you can just click on my name here, Alejandro Zambrano, and you can find what I've been saying. So I published this one on the June 25th when the market was trading up here. Was trading at 14.29, and I said probably around down here, as it says on the headline, 14.05, the market is gonna look to buy. And we're pretty much where we are now. We had an initial little bounce, gone a little bit lower, and I find it very interesting actually that the market is trying to break below the low here, but it's not really succeeding. You know, this should have scared people, some at least, and it caused maybe the market to target what would be called the fourth Fibonacci level at the 1390, but they're not. So this is actually very encouraging. I still think that we can probably go a little bit lower, but as you know, we're dealing with a massive breakout in this market, and I want to maintain a bullish bias, and I am maintaining a bullish bias about 1376. And you know, risk reward ratio wise and everything from here, it's really encouraging, because if you just imagine we go up to the actual target at 1600, which is up here, you're gonna have a very, very good risk reward ratio. So yeah, I maintain my bullish bias. There's no real change. Obviously, we need to understand that it's impossible to know exactly where price is gonna bounce from, and that's why, you know, sunk sure about 1375, I'm gonna be bullish. This is crude oil, and crude oil just continues to trade upwards, which again shouldn't be surprising because we're dealing with an uptrend. When we're trading down here, we're trading sideways for quite some time, and I said if we took out the high, we're probably gonna go upwards, which we did. We're pretty much up here now. Now the market here, being a little bit rude, stopped out people, but didn't really gain any traction. Why? Well, because the problems with the risk reward ratio here remain in the same as I've been saying lately. Because I said if you didn't buy on the breakout here, you probably need to buy on the pullback. Well, we never had the pullback. What's interesting now, though, is that you can clearly see how this now is a bit of support. Now, this is a fragile low, so I won't get too excited about it. But if you're scalping and you know what you're doing, then, you know, maybe a little pullback and then upwards. And then we'll see what happens. You know, we're dealing with a potential war in the Middle East. Not that I think it will happen. but could happen, and that is sort of keeping people worried. So I think if we take out this level, we're probably gonna go upwards towards 61.34. But as I said many times before, unless you believe, like in my case, I don't believe we're gonna have any war. So I'm saying, as I've been saying lately, up here it's time to book profits or at least close half. Unless, of course, you really think something bad is gonna happen, then you just maintain it and sort of keep a bullish bias above 56.62. S&P, again, we already covered that. Dow Jones, sorry, German DAX is bottoming out from that little buy zone we talked about over the last few days and weeks, and no real changes, going upwards. And I think that's pretty much it. So we covered the main markets. So if you have any questions, let me know. As well, don't forget to check out the rest of the content here. So we have Nicholas that is publishing content. You can check that on the homepage. If you're looking for something specific like forex indices, commodities, currencies, you can check that out. And then if you know exactly what you like if you want to know, well, dollar, Japanese yen, you just click there and it loads. The site itself is loading slightly slow right now because the full site hasn't been completed yet, but it will be completed, and at that point we're going to load more content. You can just scroll down here actually, and you find anything related to this. As for my own part, my plan is to publish maybe 4 or 5 articles every day here, and it's gonna be a bit of technical analysis, trade ideas, sometimes longer articles as well. And you can also find, as you can see here, my videos here in this little section as well. Okay, let's see if you guys have any questions. Okay, so no questions yet. That's fine. So we're gonna wrap things up, guys. If you have any questions during the day, don't forget to just reach out to me. I have my Twitter at AlexFX00. That could be something. And as well, I have a WhatsApp list on there. If you want to be added, it's free to be added. What I do is I send this daily video to you directly to your WhatsApp, so you can watch it in the actual WhatsApp. So if you don't log on in Twitter too much, or you fear of missing out here, then you can just sort of add me here. And if you have questions as well, you can always ping me back via WhatsApp. So we got a question about the Dow Jones. So let's load the Dow Jones. So this is the Dow Jones, and the Dow Jones, it's by itself, is actually very interesting. So this is the weekly chart. And you have what almost looks like a double, like a triple high here. And you have what is like a head and shoulders as well. You have yourself the head here, and then you have the left shoulder here, and here you have the right shoulder, right? So you can potentially have that break to the upside here. I mean, if you just look at this like that, it suggests that $5,436 dollar move. So this is something very interesting, and if you don't agree with that, you want to go for something more modest, you can treat this like some sort of rectangle, which it isn't really, but almost, and then you get yourself like a $3,600 move. Now, of course, what we need here is we need the price to break above the high. Until it breaks above the high, hasn't really been triggered. And in the short term here, like say we load a 4 hour, this is, at the end of the day, this is resistance here. So we need to take that out. Until that happens, this market could be rejected here. In the short term, it has a bit of a bullish bias. You have, I don't know if you can see it, so let's zoom in. You have this little section here, you have these little lows here. Take that out, you could potentially trade lower. But that bearish pattern, I think, is more obvious here in the S&P 500. And that's it. Okay, I think we're going to wrap things up. Guys, thanks so much for watching, and if you have any questions, just let me know. Bye-bye.